Welcome to Talk Tickers, where we break down the market's biggest moves. Today, we're diving into the Finnish pharma company Orion Oyj. Their latest earnings report really sent the stock for a spin. But is there more to the story than meets the eye? Let's get into it.
So this is what investors woke up to. Orion stock down a steep 6.6%. A drop like that, it just screams one question. What on earth went wrong? Well, the answer, it's not quite that straightforward.
And this really gets to the heart of it. It feels like we're looking at two completely different stories. On one hand, you have this brutal market reaction. But on the other, you have the company's management team saying, hey, our core business is actually accelerating. So to find out what's really happening, we need to look past those scary headlines.
To really get what happened here, we've got to peel back the layers of the onion. The numbers that everyone saw first, the headline figures, that's what sparked the sell-off. So let's start right there.
Okay, at first glance, this looks pretty grim. I mean, revenue down over 10%, operating profit, it just cratered, down 40%. You can absolutely see why investors started hitting the sell button. But these numbers are hiding something absolutely crucial.
So here's the real story. The key is this. Last year's third quarter had this huge one-off milestone payment of 130 million euros. Now, if you take that out to compare apples to apples, the whole picture just flips on its head. The base business sales weren't down. They were up 24%. And that underlying operating profit, it surged an incredible 68%. This isn't a story about a business in decline. It's a story of acceleration that was just masked by a really tough year-over-year comparison.
And hey, you don't have to take my word for it. The company's CEO, Liisa Hurme, she addressed this head-on during the earnings call. Her message couldn't have been clearer. The core business isn't just growing, it's picking up speed, mostly thanks to powerhouse products like Nubeqa.
Okay, so the underlying business is solid. That's great. But you know the market is always looking ahead. So what's next? Let's take a look at Orion's R&D pipeline and what they're telling us to expect for the rest of the year. So this pipeline update, it really shows a company making some smart, disciplined choices. They scored a major win with the EU approval for their cancer drug Nubeqa for a whole new group of patients. That's huge. But at the same time, they're not afraid to cut their losses. They pulled the plug on an insomnia drug to pour those resources into their much more promising oncology pipeline. Smart move.
Now let's talk guidance. Management tightened up their full-year forecast for both sales and profit. But here is the real kicker. This outlook specifically leaves out any big milestone payments. There's this massive potential 180 million euro milestone for Nubeqa that could hit either late this year or sometime in 2026. By not including it, they basically de-risked their guidance and created this significant potential for a positive surprise if that payment comes through this year.
All right, so we've got all the pieces. What's the big takeaway for investors? Let's put this all together and figure out what to look for on the next earnings call.
Our rating on the name is Market Perform. Look, the underlying fundamentals are strong, no doubt about it. But that huge question mark around the timing of that key milestone payment, it just creates a major overhang. It keeps us from being more bullish, at least for now.
So the investment thesis is pretty straightforward. The market sold off because it reacted to misleading headline numbers, and it completely missed the fact that the core business is firing on all cylinders. The next call is going to be all about one thing: getting clarity on that 180 million euro milestone. If they confirm it's hitting in the fourth quarter, you could see this stock reprice in a hurry. Now for a trade idea, you could consider a pair trade. Go long on Orion to capture that company-specific catalyst, while at the same time shorting the broader European healthcare index. The idea here is to neutralize the market-wide sector risk and really just isolate the potential upside from Orion's story alone.
And of course, this is not financial advice.